Welcome back to today's Explainer Focused Learners. Today, we're diving deep into Vertex Pharmaceuticals. But hey, we aren't just looking at your run-of-the-mill biotech company here. No, what we're mapping out today is a rapidly expanding market empire. We're going to explore exactly how Vertex built its fortress, how it's funding its new conquests, and where it's expanding next. Okay, let's dive into this. Here's our roadmap for the strategic moats and castles we'll be exploring today. We'll start with the Vertex powerhouse, look at their Q2 financial engine, and check out a transformative acquisition. Then we'll cover eliminating the competition, future catalysts and targets, and finally, evaluating the risks. Starting right off with Section 1, the Vertex powerhouse. To really wrap our heads around Vertex right now, we absolutely have to ground ourselves in this staggering number, $139 billion. That is their approximate market capitalization as of August 2026. Just to put that into perspective, this isn't some scrappy startup hoping for a lucky breakthrough. This is a global heavyweight that is literally demanding massive attention from Wall Street and investors alike. Trading on the NASDAQ under the ticker VRTX, the stock recently closed at an incredibly impressive $548.05. It even hit a fresh 52-week high of $555.32 in that same August 2026 session. What we are witnessing here is a highly focused cystic fibrosis company successfully, and I mean very successfully, evolving into a widely diversified specialty pharmaceutical powerhouse. Over the past year alone, the stock has gained roughly 35%, which, significantly outpaces the broader healthcare industry. Moving right along to Section 2, Q2 Financial Engine. In the second quarter, total revenue hit $3.33 billion. That's a solid 12% increase year over year. Adjusted earnings, up to $4.27 per share. But here is the major headline that truly made the market do a double take. Vertex actually raised its full year 2026 revenue guidance to a massive $13.1 to $13.2 billion. Management is clearly hitting the gas pedal here, and their confidence in near-term revenue generation is just sky high. So, you might be wondering, where is all this capital actually coming from? Well, the dominant slice of the pie is still their cystic fibrosis franchise, led by Trikafta, pulling in a mind-boggling $2.5 billion. But you've really got to pay close attention to the diversification happening here. ALYFTREK, their next-in-class triple combination therapy, just pushed past the $1 billion mark for the first half of 2026. And the non-CF streams, they're gaining ground fast. CASGEVY generated $76 million, which is a 151% increase, while their novel pain medicine Journavax brought in almost $50 million. Why does this matter? Because Vertex is now expecting at least $500 million from these non-CF products alone this year. It's absolute proof that their diversification strategy is working. Which brings us to Section 3, a transformative acquisition. Before we get into the deal itself, we need to quickly define endocrine diseases. Simply put, these are a group of disorders that affect the body's hormone-producing glands. This is super important context because this area of medicine has officially just become Vertex's fifth therapeutic pillar, joining cystic fibrosis, hematology, pain, and renal diseases. Now, what's really interesting about this next move is the price tag, $10 billion. On July 6, 2026, Vertex announced an all-cash agreement to acquire Vertex Pharmaceuticals for $85 per share. Closing in the third quarter, Vertex CEO Dr. Reshma Ramaniani cited Vertex as just an excellent strategic fit. And why? Because of their laser focus on specialty markets and really well-understood biology. So what exactly does a $10 billion shopping spree get you? Basically, two highly lucrative clinical assets. First step is Pulsinify, which is the only once-daily oral therapy for adults with acromegaly, a rare hormonal disorder. It launched in late 2025, and it has already captured nearly half of all new prescriptions. Incredible, right? Second is Atumelinit, a once-daily oral therapy currently in phase 3 trials. Vertex actually considers this drug the holy grail for managing congenital adrenal hyperplasia. Put these two assets together, and you're looking at a peak sales opportunity exceeding $5 billion. Let's pivot to Section 4, eliminating the competition. And this brilliantly illustrates the high-stakes, zero-sum environment of the biotech world. In August 2026, rival Sionna Therapeutics announced that their experimental drug, SION-719, completely failed a Phase 2A clinical trial, missing the primary endpoint by a pretty wide margin. Because of this, Sionna completely abandoned developing the drug for this use, and their shares just plummeted 92% in pre-market trading. Ouch. But in stark contrast, with a major competitive threat effectively neutralized, Vertex's stock surged approximately 6%. Analysts immediately reiterated outperform and buy ratings, basically marveling at the sheer durability of Vertex's stronghold.
All right, on to Section 5, Future Catalysts and Targets.
If you're tracking this stock, you are definitely going to want to mark your calendars because the timeline ahead is packed with a very dense series of upcoming catalysts. In July, they secured FDA approval for CASGEVY in children as young as 2. In Q3, that massive $10 billion Crinetics deal officially closes. By the second half of the year, we're expecting critical proof-of-concept data for their next-generation CF drug, VX-828. And finally, circle November 30th on your calendar. They have an FDA action date for povetacicept, which is a highly anticipated kidney disease treatment. With all of these milestones lined up, you better believe Wall Street is watching closely. Out of 29 analysts polled, the overwhelming consensus is a solid buy. Just look at these rapid-fire price targets being issued. You've got Jefferies leading the pack at $633, Bernstein is at $608, BMO Capital at $600, UBS at $585, and RBC Capital sitting at $570. Averaged all out, the consensus target sits right around $563, which implies some serious upside from current levels. But to remain totally impartial here, we really have to look at the full spectrum of expectations. On the ultra-bullish high end, Goldman Sachs envisions the stock reaching $653. Right in the middle is our $563 average. And on the lower end, Stifel maintains a more conservative hold rating with a target of $500. This variance tells us a pretty clear story. While sentiment is overwhelmingly positive, Wall Street essentially expects absolute perfection in how Vertex executes its upcoming plans.
This leads us to our final section, Section 6, Evaluating the Risks.
So the crucial point is that no investment is without risk. If you want to know what could potentially crack the walls of this empire, here are the 5 primary threats. 1. CF franchise concentration. Even with their diversification efforts, their profits are still heavily reliant on a single disease. 2. Pipeline execution. Clinical trials for assets like povetacicept can and often do fail. 3. Crinetics integration. Let's be real, smoothly absorbing a $10 billion company is rarely seamless. 4. Valuation concerns. And 5. Emerging competition. Sure, Sionna might have failed, but you can bet there are others currently trying to storm the gates. To put those valuation concerns into a slightly harsher perspective, we have to acknowledge the downside risk here. Some analysts view the stock as potentially overvalued at the moment. If pipeline execution falters or the Crinetics integration stalls out, the absolute lowest price target on Wall Street sits at $350. To put that in context, that would represent a pretty painful 36% drop from its current trading levels. Which brings us to our final thought. Vertex undeniably has incredible momentum, billions in revenue, and a management team that is executing at a remarkably high level. But the ultimate question remains, will Vertex's $139 billion empire continue to successfully expand across these new therapeutic pillars? Or will its historical reliance on a single disease foundation eventually fracture under competitive pressure? It's honestly one of the most fascinating stories to watch unfold in the market today. Thank you so much for joining me for this explainer, Focus Learners. Keep exploring, and I'll see you in the next one.